Ripple just announced a massive $700 million share buyback, offering $175 per share to eligible investors. That's not a small move. It's more than double the current price in private markets like Hyve, where Ripple shares were last traded at about $74 to $75. This offer, disclosed in an email from CEO Brad Garlinghouse, is not just about rewarding shareholders. It sends a strong message. Ripple believes in its own long-term value, and it's willing to prove it with serious money. Now, this is Ripple's second buyback in less than a year. The last one, back in January, offered $125 per share. So this new offer represents a significant premium and shows just how confident Ripple has become in its own financial health. Let's talk numbers. According to investor Jeremy Raper, who shared the full email on X, formerly Twitter, Ripple has a very strong balance sheet. Here's what was disclosed. $3.7 billion in cash. No debt. 41 billion XRP tokens on its books. Of those, 36.2 billion are locked in escrow, while the rest are spendable. They also hold about $600 million in other investments. And last year, they pulled in over $1 billion in EBIT. That's earnings before interest and taxes. That's not just healthy. That's impressive, especially in a market where many crypto companies are still struggling to stay afloat. So why offer to buy back $700 million worth of shares? The short answer, confidence. But it's also about control and managing equity internally. These buybacks help Ripple return value to its early investors and employees without going public. It gives liquidity to stakeholders who might have been waiting for an IPO, but aren't getting one just yet. Which brings us to the big question everyone is asking. Is Ripple preparing to go public? Well, not quite. Despite all this financial strength, Ripple has clearly stated that an IPO is not an immediate priority. The company said the same thing during its January tender offer, and it has reaffirmed that position in this latest round. If Ripple were gearing up for an IPO soon, they might actually avoid these buybacks. Why? Because the public market would be the natural way to price the shares. Instead, these offers suggest Ripple is holding off on going public and taking care of its internal stakeholders first. But even without an IPO, investors are doing the math. Ripple has 141 million shares outstanding. If you include their XRP holdings, even at a discounted value, Raper estimates that Ripple's share price could be justified at over $350 per share. At $175, the company is valuing itself at about $25 billion. That's still conservative compared to what many expect it could reach. Some estimate between $35 to $50 billion in a public offering, especially with the growing use of XRP and the resolution of their legal battle with the SEC. And yes, that lawsuit with the U.S. Securities and Exchange Commission was a big cloud over Ripple. But with that mostly behind them, and with Ripple actively making acquisitions to expand its ecosystem, it's clear that the company is entering a new phase. Still, it's worth keeping a critical eye. Buybacks like this are great for current shareholders, but they can also delay transparency. By not going public, Ripple doesn't have to release the same level of financial detail as public companies do. That means outsiders, including retail investors, are left making guesses based on leaks and internal emails. Also, while Ripple claims no debt and strong cash reserves, the real market value of XRP and how much of it is truly spendable still depends on broader adoption. So while everything looks strong on paper, the actual realization of that value could take years and will depend on market behavior, regulation, and global use of the XRP ledger. In the end, Ripple's $700 million tender offer at $175 per share is a bold statement. It shows the company is confident, well-capitalized, and managing expectations in-house. But it also raises questions. When, if ever, will Ripple finally go public? And what will that mean for XRP, investors, and the crypto market as a whole? Let's see where this goes.